I'm gonna record then right now too. All right, sweet. Yeah, so usual disclaimer, obviously, everyone do your own DD. This is just for educational purposes only. Key events for this week. Again, we have more economic data coming out. Not that it really matters at all. Thus far, the market shrugged off everything. But we are approaching the election, right? Like we're in August now, right? So we have August, September, October. We have 3 months till election time, assuming that it's still on for November. So Monday, tomorrow we have PMI, ISM, construction spending, and vehicle sales. Tuesday, factory orders. Wednesday, ADP employment report, which will be important to look at. Trade deficit, Treasury quarterly refunding, services PMI, and then we have ISM non-manufacturing index. Again, another very important measure. So Wednesday, keep an eye on that. And also tomorrow at 10 a.m., keep an eye on the ISM as well, right? You want to be looking for a rebound potentially in manufacturing, which may or may not be coming because obviously coronavirus, the economy is crippled right now. Thursday, jobless claims, both state and total. Then we have continuing jobless claims, state program, and then also total as well. And then we have household debt. And then Friday we have NFP, non-farm payrolls, which is an important number to look at. That'll be for August. And unemployment rate, average hourly earnings, wholesale inventories, consumer credit, right? So we want to look at and see if earnings are on the rise hourly, because that indicates that healthier jobs are higher paying jobs are being created. And then also the non-farm payrolls numbers coming out on Friday will be important. So we should see some volatility. I mean, the past 2 weeks we've been kind of consolidating in a range on the indices, but they are being carried largely by a few companies, namely Apple right now. Apple is just, it just shot up on Friday, as you all saw, and had a massive gap in the charts as well. That isn't a very healthy market, right? And we'll go over that after. Again, touching on what we discussed last week about the Swiss franc. So I mentioned last week it was looking at breaking out to a new all-time high, and it actually did that. So it popped up to almost 110.5 against USD, pulled back about 1 cent, but it's on a new breakout to all-time highs again. And that's pretty meaningful if you're a US investor and you want to hedge your bets a little bit and have some security in a currency position. Swiss franc is probably the best bet. And US dollar is also declining again, right? It broke below that support level I pointed out last week. And now really it's in no man's land. It can go down to 85 or down to, a level of 80. So it has a fair bit more to decline. About a 10% decline isn't unreasonable in this level. And again, it's all due to the US just printing money more than any other country, like with zero regard to how it's going to affect their economy in the long run, right? And again, you need to question what will happen with the Fed, even though the Fed wants to keep rates low and keep printing money. And Powell said last week they'll be accommodative to whatever they have to do to keep the economy afloat. But you got to remember that their mandate is twofold in terms of keeping inflation around 1.9% and keeping employment at the highest levels possible. And if inflation starts to just creep up really fast, you're going to have a huge issue there, and they'll be in a quandary of saying, either we keep rates low and risk hyperinflation, or we raise rates and risk destroying the economy because it's so saddled with debt, right? Like you have auto loans, student loans, mortgages, credit card debt. You have high yield corporate debt. You have low yield corporate debt. It's just a economy running purely on debt right now. Like most corporations don't have cash. Most people don't have cash. They're just living life on credit, right? And that's fine right now when rates are at 0%. But if they creep up again, given the high volume of debt, even a small increase of 1%, for example, that can hamstring a corporation, right, or an individual as well. If someone's living off of credit cards and they're breaking even right now by paying off their balance, but a 1% increase causes them to go in the red, that's a big issue, right? Extrapolate that across the entire population, and also factor in that evictions are on the rise and defaults on mortgages are also on the rise as well, right? People are neglecting to pay their rents. And also in the retail market, many corporations are also going bust and they're closing up their stores. And that's going to hit commercial real estate pretty hard, right? Retail and commercial real estate. And then you got to factor that corporations are seeing that they don't really need an office because, for the next at least year or so, most corporations are going to be working from home, right? And they see that it's a feasible way to work. They might say, you know what, why would we have an office again? Let's just keep doing it as is, bank that extra cash, increase our earnings, pay out the bosses and the directors and CEO and CFO and CTO, pay them out more money, right, in bonuses because they're making more profit. That's what will likely happen, right? But who's going to get hurt? Commercial real estate, downtown cores like Chicago, New York, downtown LA, for example, Toronto, right? You have a highly concentrated area of commercial real estate, all these restaurants and little shops that rely on daily foot traffic. And when you don't have that, they close up shop. What happens to those real estate investment trusts that are supposed to be paying out nice dividends to their investors, right? When they can't pay those dividends out because they're no longer receiving rent, right? Well, they stop paying their investors pull out, they cash out, they're forced to divest their funds, right? Like it's a huge cascading effect across the economy, right? So anyways, I digress, but the volatility index is also nearing lows right now too. It's near a support level around 2250. And that's important to look at because that would be a nice area to start buying some insurance as we approach the election, especially if Biden wins, which it seems like is a real possibility given that Trump is looking at delaying the election, which he wouldn't do if he was thinking he was going to win the election, right? So interesting point of view there, because if Biden wins, rest assured the market's not going to respond favorably, and that could cause a nice little 10, 15, 20% crash in a short time span as well, right? So buying insurance when it's cheap is a smart move, right? You buy a few months out, you buy yourself some time, you buy a decent delta, and maybe you sell some calendars on it in the shorter term, safely out of the money to a point where you're making a profit if you're doing so. And that could be a nice little hedge for your portfolio, right? Alternatively, if you're not really heavily invested, then there's no real need to hedge yourself, right? So don't short for the sake of shorting. But there will be good asymmetries of risk in the next few months, given that we're approaching the election pretty fast, right? So keep an eye on the VIX. And then interesting little post by Sven Heinrich on Twitter, Northman Trader, great person to follow. He posted this on Friday, showing the Dow corporations, right? Showing that every one of them was red except for Apple, right? So Apple was up, 10%, and everyone else was down, right? So interesting to see that in an index with 30 corporations. There's only, I think, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. There's 17 of the 30 companies here, but I'm pretty sure the rest of them were all red on Friday as well. So interesting to note that Apple's leading the way again, and again the earnings report was decent, but they delayed their iPhone, and you got to think that tech is getting pretty frothy here. You have Facebook at all-time highs, Amazon near all-time highs, Apple's at all-time highs. Google had a pretty bad report, their first revenue decline in history, which is a big thing, right? I mean, when that happens, if it starts a trend, then you don't want to be investing in Google, right? You also have Microsoft, which didn't respond too favorably on Friday either. And if they're buying TikTok, that's going to be a big acquisition, probably around, I'd imagine, $50 billion or $40 billion. Pretty expensive, considering that just a few months ago, TikTok wasn't really even that big of a thing. Like I remember last year, I never even heard of TikTok, right? Nor anyone that I know, right? Only in the last, I'd say 6 to 9 months has it become a much bigger thing. And again, social media is very fickle, right? It's always about the next best thing. You get Snapchat, which hasn't been profitable yet in 8 years, which is incredible. People are actually still buying that company. Facebook is obviously very profitable, and Twitter, which is profitable now as well. But investing in social media, you're not really investing in any hard asset. You're investing in a data mining company that sells ad space for the most part, right? That's kind of the issue with the U.S. economy, is that no one's creating any hard goods anymore, right? And if you're not creating hard goods, you're not creating jobs. If you're not creating jobs, you're not spreading the wealth around, right? So by sharing, or by creating profits for a small number of corporations, really what you're doing is you're concentrating the wealth in a very, very small area, which is detrimental to overall country, right? And the U.S. may be on the decline now, given the way they've acted and responded to the coronavirus by just printing money over and over again. And again, Trump's responses to the Fed back when Obama was president were that, he was lambasting Yellen for keeping rates low, right? He was saying the rates should be higher, right? But all of a sudden, when he's in power, he's saying rates should be lower and lower and lower, and they should be negative because they're putting the U.S. at a disadvantage, right? So it's funny watching him talk out of two sides of his mouth, right? But yeah. So earnings for the week ahead, we got a fair number of smaller corporations that will have massive moves. Beyond Meat on Tuesday, which should be a big mover. That one I'm looking at. Roku as well, Square, Cloudflare, which is one of Joel's favorite companies to look at. Ticker symbol's NET. But overall, so tomorrow we have Tyson Foods in the morning. We have after close, we have Chegg, which Aaron was talking about before, actually. I believe they're an educational company, online education, if I'm not mistaken. Virgin Galactic reports Take-Two Interactive, which is the creator of Grand Theft Auto video games and Red Dead Redemption as well. You have Cirrus Logic, which Paul mentioned as well, and they're a supplier to Apple, so they should probably do pretty well, assuming that their success coincides with Apple's success as well, right? Tuesday, you have American in the morning, BP, CyberArk. I've been watching CyberArk for a while. I think they're going to do very well. Israeli-based company that is still trading at a low valuation of around $4 billion, and they're very profitable. So they have a lot of upside, in my opinion. Ralph Lauren should be indicative of retail spending. And then we have Beyond Meat after close, Activision Blizzard, which should be killing it because Call of Duty has been absolutely crushing it with all those microtransactions to upgrade your guns and whatnot. And the number of people that are playing it right now is insane. Walt Disney Company reporting as well. Again, I'm not expecting too much out of them because obviously most of their operations have been shut down for the past few months. Twilio has been killing it as well. They've gone on a serious run. Like, if you pull up their chart, let me pull up the chart right now. One sec. TWLO. So you can see Twilio's 1 year chart. They were at like 72 on the March lows, and they're at 279. And you pull up their 5 year chart, they were trading at $25 in 2018, right? So they're up about 11 and a half times roughly from the 2018 levels. And they were in a tight range for a while. So they're a service-based business, and the current valuation on the corporation right now is, let me tell you, they're worth $37.5 billion. They're doing 1.27 billion in sales, and they're losing money. They're losing $360 million, right? So it goes to show you just how frothy the valuations are in tech, right? They're trading at a price to sales ratio of 30. But I'm pointing that out because there are corporations like Slack, for example, that have similar patterns going for them, where Slack IPO'd back in June of last year. So they've been on the market for about a year now. And they've been in a pretty tight range between like 35 and 20 roughly for the past year or so. So if they end up breaking out, they could have a similar run to Twilio, and given them, they have more shares outstanding, they could push to like, $70, $80, $90, maybe $100 over the next few years. Again, I'm just drawing parallels to service-based businesses that offer software solutions, right? Other corporations that are reporting this week that are interesting are There's also, well, Nikola, right? They won't have anything to really talk about earnings wise. Wynn Casinos and Resorts, that one should be interesting to look at as well because they're already trading right near that 70 mark, which is heavy support. So if you pull up the chart, look at Wynn. Whoops, that's WYN. So here's Wynn over here. You can see that there's a heavy level of support at 70-ish. And if they break below that and push like, 60 or 50 or something like that, they would be looking at that support level back from 2016, right at 51 or so. So if you are interested in going long that, selling puts out of the money isn't a terrible idea if you don't mind owning it at like $50, right? So you can pull up the option chain, and I'll do that right now just for the fun of it so you can see what's going on there. Here it is. Options chain. So for August expiration, you have the 60 strikes going for like $1, right? $1.05. So you'd own Win at like $59 or so, right? If you go with more time on your short contract, you could sell the 50 strike for $1. Again, your return on risk isn't great, but the intention here is that you'd want to own the stock at like $49, right? That's the whole idea behind it. So you could actually I still have the question like, do I mind owning the stock at a certain price? And if you do, then you can sell the put option, cash secured, and then you'd be happy owning it at that lower price, right? It's kind of like what Ashish does on certain stocks. What else do we have? We have Moderna in the morning on Wednesday, CVS, Wayfair, which has been running like crazy, Humana. So you have 3 different healthcare insurance providers. Regeneron over here as well. Excuse me. Square, Roku, Fastly, which has been running like crazy. Again, they're another internet SaaS business, right? Etsy, Western Digital, so WDC is reporting on Wednesday after close. They'll have a great effect on the semiconductor industry, right? So Micron will likely move up or down based upon WDC's report on Wednesday after hours. So keep an eye on that as well. If you see some cheap calls or puts on Micron for Friday's expiration, it's not a terrible bet because if they smash and Micron pops up, 5-7% in step with WDC, or drops, 5-7% as well, you might find a decent trade there, right? Thursday in the morning, you have Mercado Libre, which is the the Brazilian equivalent of Amazon. You have Wix as well, which is a competitor to Shopify. So Wix is interesting because they're valued at about 10% of Shopify's valuation, but they're generating about half the amount of revenue. So they should have a pretty solid quarter as well, given that everyone is building their own website and running online shops, right? What else? You have Norwegian Cruise Lines reporting before market on Thursday as well. So NCLH, keep an eye on that too. Again, no earnings to speak of, but they may give clarity on when they may embark again. So that could be a catalyst for the cruise line sector, right? Papa John's Pizza, probably doing very well given that COVID is a stay-at-home eating kind of time. After close on Thursday, you have Cloudflare, which I just mentioned, one of Joel's favorite stocks. They're trading around $42 a share right now. I was reading some analyst reports saying that they could go up to $50 in very short time, so in the next month or so. Again, another cloud-based business, cloud security, right? Dropbox, Uber, the Trade Desk, they should be doing pretty well as well. T-Mobile, Fortinet, which is a cybersecurity corporation as well. And then Friday, you have Noble Energy and Magna, which makes car parts, right? So MGA. They're probably going to be doing pretty poorly given that the automotive sector has been doing terrible of late. So that's pretty much it for earnings this week. Again, it's not as exciting as last week with the big FANG stocks reporting, but you do have a lot of opportunity here with Roku, Square, Fastly, like Virgin Galactic, Nikola, Win. There are a lot of plays to be had, right? Just make sure you look for liquidity in the options chains, right? Don't trade illiquid options, right? It's a big mistake people make, where you buy options that have no open interest and you can't ever exit your position, right? That's an issue. So just keep an eye on that. Analysis for the week ahead, right? S&P, current price 326.48. The EM is 587. The PM is $8 approximately. So upper move would take us right to that gap fill I mentioned last week from February at 332.50 area. So I'm looking for that gap fill to occur before getting into some put positions longer term into the election. And that could happen this week, right? That's the upper move. Lower move is 318.41. So again, we've been trading in the range of 320 to 326 the past roughly 3 weeks or so. And between 300 and 326 area for the past roughly like 3 months since May, pretty much. So May, June, July, right? So we'll see if we can break above that range and fill that gap from February. Nasdaq, triple Q, current price 266, EM is 601, PM is 827, upper move 274.27, which would be a new all-time high, and lower move is 257.73, right? So keep an eye on that. With Apple having a huge gap below, that should fill in due time, I would imagine. I think we saw a lot of FOMO buying on Friday when we rocketed from 410 area to 427 in the matter of about 2 hours before close. So that was a pretty steep incline, but yeah, I think that gap will get filled in the next month or so. Russell, Iwm Etf, current price 147.14, EM is 417, PM 593, and upper move would be 153.07, lower move 141.21. Again, we have a lot of smaller companies reporting this week that are actually in IWM, so that should move it dramatically. I expect a lot of those corporations to underperform, given that right now the economy is very top heavy based on tech, right? The FANG stocks, right? And then we have ticker analysis from last week. So last week we only had 1, 2, 3, 4, 5, 6 corporations that actually breached and finished outside the potential move. So we had Apple, obviously, with that massive run on Friday. We had Facebook, obviously, with that huge pop on earnings Thursday to Friday. GLD had a massive run as well. Was this 3M over here? Yeah, 3M finished outside the range as well. The upper was 169.08, and it closed. The lower was 150.56, and it closed at 150.53. So about 3 cents below that level. So just barely outside the range, right? For PayPal, they had a huge week. The upper PM was 188.87. They closed at 196.14, and that was expected because, again, everyone's shifting to Shopify stores online, and who are they paying with? They're paying with PayPal, right? They're not using Square. They're using PayPal or Shopify Pay, right? So that's why they had a massive beat on earnings. Qualcomm, they settled a patent dispute with what's a company called again from China? Huawei, right? So they had a massive run as well on earnings. They were up 18% on the week, and their upper PM was 95. They smashed to 105.58. Not on this list is UPS as well, which had a massive run too, and they would have broken above their upper PM last week too. And then the breaches for the week were only were Boeing. So Boeing breached the lower area, but closed inside of it. The lower PM was 156.39, and it closed at 158, right? But it went below it temporarily. And then on Shopify as well, upper PM was 1,056, and it closed at 1,023.99. But it actually did breach above it during the week, right? So again, the PMs are great to be used as like a barometer for where you want to enter your trades. If you see an upper PM hit, like on a Monday or Tuesday, it's not a bad idea to sell it out of money call spread, pull in some premium, or buy some puts, right? Or put spreads, right? And again, guys, thanks a lot to Frankie for doing this. He does a lot of work on Fridays, putting this information out. So thank you very much, Frank. Appreciate that. And then for the week ahead, we have, again, a wide plethora of corporations that are going to have probably pretty large moves, I would imagine, given that Apple has a gap to fill. So if Apple starts falling, the market would probably fall with it, right? So Apple's PM for the week is around 22, which is a large PM. Typically their PM's around like 13-ish. So the percentage change would be 5%. Upper move would be 447.10. Lower move would be 403.26. AMD again had a very strong week last week as well. Their upper PM is 82.66. Lower is 72.20, and the current price is 77-ish. Amazon 3322.77 upper, 3006 lower, and they're at 3164 right now. Activision Blizzard reports this week. I would imagine they're going to beat earnings. They had a phenomenal quarter last report, and they popped initially and then came back down. They didn't really do too much. They're pretty much flat. So expect a pretty solid report there. And last quarter they actually beat by double their EPS. So we'll see if they can carry forward with that. But again, it's a video game company, right? So people are staying home playing video games right now. No one's going out to concerts or sporting events, right? And streaming.
What company was that? I didn't hear what company you said.
Activision Blizzard. Yeah. Yeah. So upper PM is 92.79, lower is 72.45. And then Beyond Meat reporting this week. Again, the asterisks beside the tickers indicate that earnings are going to be this week as well, right? So you have Beyond Meat, closing price 125.78, the upper PM 148.82, lower PM 102.74. That'll be a big mover. Disney closed at 116.98, upper PM 124.65, and lower PM 109.31. Then we have Moderna, they're reporting as well. They close at 74.10, upper PM 84.25, lower PM 63.95, and they're actually working on a vaccine for the coronavirus, so that's why they're so high right now. But they'll probably get some color in their conference call on how their earnings will be affected going forward, as well as any progress made on their drug development as well, right? Norwegian Cruise Lines reports on, I think, Thursday morning before market close. Closing price 1364, upper PM 1530, lower PM 1198. Might not be a bad play to sell puts on, just because you can sell puts naked, cash secured. If you don't mind owning it at 11 or 10 a month out or so, right? Again, you have to want to own it if you want to do that. But these cheaper stocks that are trading, around $10 or so, the margin requirements aren't very high, because to cash secure 100 shares requires, like $500 to $2,000, right? It's not a massive investment. Then you have Nikola. They finished at 30 on Friday. The upper PM is 35.10, so 35.80, lower PM 24.20. And then Roku closed at almost 155 on Friday. The upper PM 181.50, which would be a new all-time high, and lower PM 128.08. Virgin Galactic reports tomorrow after close. They had a lackluster cabin showing last week, which caused their stock price to go from about 27-ish down to 22.50, but they may find support around 20-ish. So they report tomorrow. Their upper PM is 26.71, lower PM is 18.19. And then Square, which has been running like crazy for no real reason, given that their last quarter, they reported that they would have probably a pretty tough year ahead. They closed at 130, almost near all-time highs, and their upper PM was 145.95, so a massive movement to the upside possibly, and downside was 113.75. Wayfair, again, they've been running the past few months, 266.15 closing price Friday, upper PM 313.90, so a massive possible move to the upside of about $48. Lower PM is 218.40. And then we have Win, of course, which I mentioned earlier, closing at around 72. They have an upper PM of 82.44 and a lower PM of 62.40. And I may be playing that by selling some cash secured puts, just because I wouldn't mind owning it. And if I'm assigned, then I'll just take control of the shares and sell covered calls on them for a few weeks, right? That's pretty much it for today. Any questions, guys? Anyone?
Not a specific, but can I ask why you wouldn't mind owning Win?
Just because they're trading at a low valuation, about $5 billion. And in a normal market, they're producing about $8 billion in revenues, and they have a nice $4 dividend in normal times. So if you own the stock at around $50, you're pulling in a $4 dividend. That's a pretty sizable dividend, right?
Yeah.
That's really the only reason why. And you got to remember that alcohol, tobacco, and casinos will always be around, right? The industry stocks, as they're called, will always make good money. So buying them when they're cheap is not a bad idea at all.
How are you guys? It's okay. You can put it over there. Don't worry. Tim shut the door.
Yeah. Anyone else, guys? All right, guys. Well, I appreciate the time as usual. Hopefully this was an informative session. Anyone has any more questions, just fire them off on Discord. I'll be posting the PDF on the server as well, and I'll be posting a YouTube copy of the presentation on there as well once I upload it. So hope you guys have a good night. I'll see you guys online tomorrow, bright and early, 9:30 a.m. And let's have a profitable week.
All right, man.
Make it green. Thanks, Nick.
Thanks, Nick.
No problem, guys. Have a good night. Take care.